Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with James Sowers, from an angel investor and co-host of Exploring the Block. James, thank you for joining us.
Thanks for having me.
So, James, tell us about your background before investing in early stage. What were you doing before this?
Yeah, it's kind of interesting because when people always say, I like to ask people, what's your background or what do you do, right? Stuff like that. I always go back to the fact I'm actually abandoned at birth, and I was adopted from South Korea. And when I was a little kid, I used to say I was like one of those little hustlers, buy something for $1, sell it for $2. It was more like buy something for a nickel, probably sell it for a quarter, but everybody gets the point. And I've been kind of saving and investing for decades. I mean, when I was a little kid, I was like finding pennies on the ground, keeping them. Somebody gave me a few dollars for Christmas. I was saving it. And then by the time I was 18, I started investing in stocks. And over the years, it kind of compounds and adds up. As far as crypto goes, I first bought my first Bitcoin in 2013 because I had heard about it before then, but I was kind of nervous about some of the overseas exchanges because when I was into trading Forex, it was like a Roach Motel overseas is what you heard. You put the money in, but you may or may not get it out. So I waited till there was this thing called CoinSetter. It was actually in New York. It was an exchange, and I think they ended up getting bought by Kraken. But it was in 2013 when I first purchased Bitcoin. That was how I got into that. And then later on, I started getting the crowd sales. And my concept or my thesis was that's kind of like the new age of money. Oh, this is pretty cool. This is different. This is like a new wave of technology. I never thought it would like go crazy like it has, though, so quickly.
So what's your advice for people that's starting to invest in this space right now? What would you tell them?
Yeah, I would say like in ICOs, I would be very careful. Make sure you read the white paper and you actually understand what they're doing. Because a lot of white papers and a lot of companies, they have this big grand vision, which is great. If they do it, they can really change the world and do things we've never seen before. But I think you have to ask yourself a few questions. Like, is the team doing it credible? Have they ever built anything before? Does this even make sense with today's technology? Because some of the greatest ideas and some of the people that are doing them could even be very capable. But if it's too early, it's not going to work. Just like back in the day, I think Reid Hoffman, which everybody knows, he's a legend, very genius guy. He tried to do SocialNet, and that didn't make it because we didn't have the iPhone yet. And that's what you needed to have a Facebook type thing.
So if we look at investing in the crypto world or blockchain or any area in there, how do you see the industry evolving at this stage? It is moving very quickly, but where do you see as the occurring factors today?
Yeah, I think there's going to be a lot more push towards like the role of a token, what its features are, what its purpose is, and governance. And then there's going to be regulation. So I think that not just the United States, but all around the world, it's such a new technology that the governments are trying to figure out its standards for what's a security, what's a utility, what you should be allowed to do, what you should be allowed to say, what's overpromising and what's not overpromising. Because sometimes some things could be really ambitious, and if someone believes, they can achieve it. But some things are just so crazy that the person trying to do it can't achieve it, but someone will someday. And it's really hard to know the difference. I mean, really, really hard. But I've seen a lot of new protocols, which is pretty cool, are being developed. Like ERC 725 and 35 for identity, and then 1155 for video game standard. So, that all started after ERC 721, non-fungible tokens. People were like, wow, somebody can do something besides ERC 20. And it kind of like opens the floodgates. I look at it the way that like the 4-minute mile was never broken until that one guy, I think Bannister, did it. So now somebody found out there's a new way you can do ERC 20 and evolve it to 721. And now all these new ones are just going to start popping up.
So what do you think that's going to mean for the investor? That just gives him more options to choose from. But then how does he tell which one's going to be the winning technology when that happens?
Yeah, I think it's kind of hard to know. I mean, even if you're really technically an expert, you really don't know. Because a lot of it has to do with adoption. I think it's really hard to get adoption for those things because the community has to say, okay, this is the standard. We all adopt it and everyone starts doing it. And just because that protocol exists doesn't mean it's going to be very valuable. I have an actual argument with a lot of people in crypto that the fat protocols in the very, very long run may not be the most valuable because it's just like back in the day, PHP existed. And of course, you couldn't buy or trade it as a token, but the most valuable things like Facebook were built on top of it. So I have a theory that someday, if it's even possible, there'll be a master protocol, which ties together all the regular protocols, like they call them the fat protocols, interlocks them some way, whether it be for security or whether it's to help them scale, and it'll take a rent from each one. So it'll almost be like a de facto index fund where it has a little bit of each crypto inside of it as payment. plus its value as a utility, and that will end up being the most valuable token.
So is that your investment thesis for this sector, whatever becomes the master technology, or do you have another thesis for this sector?
I think that's one way, but I also have a thesis there could be one more run up in Bitcoin, because we're not really sure if Bitcoin's digital gold or what it exactly is. There's a lot of arguments, but I think in the very end that it gets ran up one more time. For instance, the custody problem gets solved, which people are working on. And I don't just mean anyone doing it, but I mean like someone like a State Street says, okay, we're going to do it, because then all the pensions institutions are like, okay, I can trust this. And then the SEC will get confidence and make an ETF. And if the ETF actually has to buy the Bitcoin, that could drive the price up, 100,000 to a million possibly. And then at the end of if it's a bubble, then it'll fall rapidly. And if it's really digital gold, maybe it ends up being, $1,000, $2,000 or something like that, because it have a premium because it's digital. But if it was really just tulips, like some people argue, it could be $1 or $100. So that's kind of my thesis. And BTC is kind of like the reserve currency in crypto right now, because, it's the pair against a lot of the other ones. So it pulls everything up with it. But when it sells off, they're all going to sell off.
And so which startups do you find fit that thesis best, or would be the best to invest in order to take advantage of that next run-up?
It's really hard to say, because I'm not an RIA, so I don't really give investment advice. But I kind of look for companies that are real companies that have a real product right now. And it's even better if they already have a working blockchain. Like Simply Vital Health, I'm an advisor and an equity investor in them, and they went through Boost VC, and they already had a working blockchain and a working product before they had a protocol. Another company that I'm heavily involved with, Academic, they have a working app, but not a blockchain yet, but it's a free telemedicine app, and people were already using it. It was actually saving and changing lives, and now they're going to try to build the first ubiquitous blockchain for healthcare, and I think they're going to accomplish it. I mean, it's a great company. They're one of the ones that's featured on the show.
So how is the app doing? Does it have its own infrastructure in place, or is it needing more infrastructure to be successful? We hear a lot of thesis about investing in the infrastructure today and the applications tomorrow, because you have to have a very robust infrastructure in order to run the apps. Of course, everybody wants to run the apps because that's closer to what the customer wants on the consumer side. But how is it handling the infrastructure issue?
Well, right now, they're not on the blockchain yet. So the app, somebody goes on there, they press a button, and a doctor actually comes on there, and they say, feeling this way, I'm feeling that way, and they can give them some advice. There are some rules and regulations. I'm not real up on all the medical rules and regulations, but eventually they're going to have a blockchain that actually stores data and things like that, and people will be able to use the medical token to actually pay for a service that isn't free. So, it's free to get your free, like I call it, consultation on the app, but eventually, you may want other services or see a specialist, and that's where you would pay with the medical token. And they're getting more and more doctors in the network, and they're actually out of Mexico and 20 other countries, and they're launching in the United States this month. They're actually getting an office in Los Angeles. I think it's Beverly Hills.
And so for those who are building the apps like that, what is the challenges in this space right now that they have to overcome?
Yeah, I think for most of them, especially if you're building on top of an existing blockchain like an Ethereum or an EOS or something like that with the dApps, is on scalability. Because I think the blockchain right now has scalability issues, and I think someone will solve that eventually. It's just, I look at it this way. In the short term, everything is like way, way, way overhyped. But in the long term, it's way, way, way underhyped. Because most people don't think like linear way. They think in a linear way, not exponentially. And it's going to move exponentially once we really get something that helps us scale. And I don't think anyone can really know what that is. It's just going to come out of the blue one day, and we'll be like, oh my goodness. It could be like some kid that's like 10 years old, it's been coding since he was 3, already working on this, and we don't even know it.
Well, EOS, you mentioned, is now coming out with their blockchain, and of course, it's a very well-funded startup. What do you think we're going to find when they hit the street with theirs and it starts to work at full capacity? Aside from scalability, what do you think the other challenges might be?
Well, I know that they were recently talking about changing their governance model, because right now there was a lot of, I guess, I don't know what to call it, but people were a little infighting or whatever with the governance. And there was, I don't know if it's true, but I saw an article that said someone was hogging the RAM or something. And you never know what's true with some of these media articles. I'm sure there's something going on, but it's probably exaggerated. But I think that EOS technically sound. And eventually, if they get it down to one blockchain or so, it could be pretty good. I think initially, though, I'd heard there's 21 blockchains launched at once. So it's probably a little bit of chaos.
Wow. 21. That would be a challenge for sure.
Yeah, that's a little bit at once, a little much. Yeah. A little ambitious.
Yeah, so talk a little bit about the risks you see in this space. It seems like there's, of course, plenty around. There's technology, there's regulatory, and there's business case and so forth, but where do you see the real risk coming from?
I think there's a couple of different risks that people never think about. Like one risk is I call it yourself. Because you have the keys and you got to remember that crazy either 12 or 24 word phrase and all that. Well, if you lose those, you can lose your crypto, and that would be yourself. And also not only just sending crypto from one wallet to another to an exchange, if you do that incorrectly, you can lose crypto. And then you also have the risk of the exchanges failing, because a lot of these exchanges, probably all of them, are basically unregulated. I mean, to some extent in the United States, they're starting to get regulated. But it's just crazy because, an overseas exchange, just like that was my old theory about the Roach Motel for Forex, I think a lot of these exchanges overseas are going to end up, one day you wake up and they're going to be gone. And if they're not gone, maybe it's nothing they did intentionally. It could be that the government and their government says, hey, U.S. people can't access this. Or our government might say you can't access that. So it could be that too. And then there's always the risk of hacking. Like somebody tried to hack my phone. Well, they did hack it. And what they did was they called up AT&T, pretended they were me. They had my PIN number somehow and changed my SIM over the phone. And they got into some of my exchanges. I'm one of wallets, and they tried to do stuff, but luckily they were unsuccessful. And I couldn't understand how they could know my PIN and all, even with all the stuff in the dark web. And I found out from law authorities that there's some group, but nobody knows who it is, that is buying the information from employees at different places, allegedly, and pretending they're you and doing this. It's crazy. It's happened to many people, apparently.
So let's talk about the regulatory risk. Right now, the SEC declares all ICOs to be securities, and it seems like they're starting to tease that apart. What's a utility token? What's a security token? But what if they don't get that right? What happens if they do remain securities and they don't turn into tokens and enable these applications that we want to make on top of the blockchain and then, of course, promote through ICOs?
Yeah, I think that if they get that wrong, what will happen is they'll lose a lot of innovation, and a lot of it will go outside the United States. I mean, a lot of companies now are actually doing their ICOs by setting up Cayman organizations and Gibraltar organizations, and to some extent Singapore. And, in the beginning it was Switzerland. Maybe people will go back to that eventually. And so the United States will lose all of that. I know that Wyoming is trying to do a great thing where they're trying to be like a safe haven. But I look at that in the same way as Colorado was a safe haven for, I guess, cannabis. If it's only one state, or even if another state adopts it, that doesn't really do a whole lot in the United States, because people are still going to be scared because federal law versus state law, and they're still going to go offshore because lawyers have become more and more conservative.
So in the blockchain space today, where do you see the immediate opportunities people should be pursuing?
Yeah, I think one thing that's going to be interesting is, as you talk about securities, is asset backing things with real stuff. So when I say real stuff, like domains, real estate, phone minutes, things like that. Like there's a company I'm involved in, ITO Coin, which is actually a portfolio of domains backed by the token. So that's kind of interesting because it has real assets behind it. And I know people are doing art now too, that there's this one company, I think it's called Masterworks or something like that, and they're doing paintings where they bought the painting and they're going to do a Reg A Plus ICO where the tokens are shares, a share in the painting. I think someone will end up doing that with real estate someday. I know that the Plaza Hotel is attempting it. I'm not sure how that's going, but I think somebody will figure that out. And there's a company called Sigilo that's tokenizing phone minutes on their platform where it can be traded for stuff. So I think that's one place things are going to go. And I think there's going to be e-commerce too, where people will be able to use actual tokens to buy real stuff or to redeem it for rewards. And they may not even do an ICO. It'll just be like every company, like a Facebook or an Amazon will have their own token, but not sold to the public, where you're rewarded for being a user. And then you can use the token to buy virtual goods maybe, or even there'll be some kind of exchange where you can take those tokens out of there and get real stuff for them, like anything.
So you mentioned virtual tokens and virtual goods. What about the crypto kitties? Where do you think the digital art's going to end up in this process? It seemed like it was hot for a while and it's cooled off now.
Yeah, well, ERC 721 has some issues because when you do that, you can only make one of each one. So like each kitty was unique. Like when I looked at it, I was like, oh, this is freaking cool. What if it was like baseball cards when I was a kid where they could make tokenized baseball cards? So there'd be some limited ones and some not. But the problem with ERC 721 is you could only make one of each one. So you couldn't have like a Michael Jordan basketball card and say have a limited edition of like 150 because there's only one of everything. So I think someone's going to solve that problem and make a new standard. I was talking to some people about doing something like that. We're saying, well, what value would that really add? Because we have 721 and 20, because I was talking about using the function from mint token and putting that code inside of doing a soft fork of ERC 721 and just calling it like ERC 723. I got the 23 because Michael Jordan's my hero. And I was thinking about collectibles. And they were saying, but yeah, that's still a cross in between. Why would you really even need to do that? But the question about that is because 721 isn't considered a security. It's only considered collectible. And if you make it like a hybrid, the question is would the SEC and all them look at that as a collectible or a security? Because that would be an answer to fix the problem, but it may actually make it still a security in the way that the art is. So nobody really knows.
Yeah, good point. So in the last few minutes that we have here, what else should we cover?
I was thinking just to mention about like angel investing and stuff like that. I think that what's going to end up happening too with a lot of this stuff is just we talked a little bit about betting on the founders and the team. And with my angel investing, it's really mostly 80% betting on the founders and then maybe like 10% on that particular market and the timing. And then in some cases there's traction, in some cases there's not. But like how I really learned and got into angel investing a lot was Paul Graham from Y Combinator. I watched a lot of videos, with him talking about how to be a good investor and how like the good investors basically work for the founders and the bad investors think the founders work for them. And I think that was pretty good because I've gotten into a lot of good deals and made a lot of progress by taking that point of view. And it's pretty interesting too because it's kind of like a real privilege to work with the best founders. So, basically if you agree to invest, I'll invest, sign the term sheet, save for the convertible note or if it's a price round, whatever it is, and then wire the money the next day or the next couple of days, depending if I couldn't get to the bank. And then just if they need any help, they can reach out to me and I'll try to help them if I can. But, I don't want to like get involved and try to tell anybody what to do or anything like that because I have a feeling too, because the founders are going to be relentless, the ones that you want to bet on, and they're obsessed. So they're going to do everything they can to succeed. And if somebody's trying to tell them what to do, even if you could tell them what to do, what you shouldn't be able to, they could easily just quit because startups are hard. And I think people in ICOs, just kind of circling around with that, are going to find out that ICOs aren't free money and startups are hard. Just because people were able to do an ICO and raise a lot of money doesn't mean they're necessarily going to succeed any easier in any of these startups. I think sometimes having too much money is a problem because then you aren't frugal and you just start spending money like crazy. And next thing you know, you're out of $20 million. And you're like, what the hell?
It goes fast. Well, appreciate your taking time. How best for the listeners to get back in touch with you?
They can follow me at Primal Key on Twitter. And also that exploringtheblock.com TV series, there's a little thing on the bottom to contact people. And then I'm also involved with a company called Collective Wisdom Technologies that's actually kind of doing an interesting thing where it's wisdom of the crowd to fund companies, but it's not a crowdfunding site. And they're going to be taking applications. So people can go to that site and apply too. So there's all kinds of ways to basically get in contact with me.
Well, great. Well, I appreciate your sharing your thoughts with us today. Hope to have you back for a follow-on real soon and appreciate your taking time.
Thanks a lot. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.